Good morning, traders and investors around the world, and welcome to Wednesday's edition of premarketinfo.com, where we prepare you for the most important hour of the day, the first hour. Well, Dennis, looks like we got a little boost here in the overnight session off the Goldman Sachs earnings and kind of settled down trading mid-range.
Yeah, we're just up a couple of bucks here. Goldman Sachs actually popped over $3 on their initial report, but then pulled back here, Joel. It's only trading up about a buck now, 98.80.
Okay, getting to the numbers in the S&Ps. So far, the session high stands at 1298. That's just below yesterday's intraday high of 1299. If that holds as the high of the day, we have a downside target of 1280.50. Globex low currently stands at 1286.75. That was 3/4 of a point off Tuesday's intraday low. If that holds as the low of the day, we have an upside target at 1204 1/4. Right now, our swing area is 1292.50, mid-range for the day. Moving on to the Big Ten. ExxonMobil yesterday pushed up towards that $86 level we had been talking about. Got as high as 86.13 before peeling back and settling at 85.69. Still got to keep that 86 number in mind, Dennis, even though I got 13 cents below that. Coming back on the downside, if we go into sell-off mode, we have a gap between yesterday's low, 85.40, and Friday's high at 84.92.
Yeah, I think you've got the top end of this range pegged pretty good, Joel. Even in the pre-market, there's some offers up there, 85.99, 86. 86 bucks is, this range, if we go back, it's been 85 to 86, for the last month, 85 to 86, taking it out by maybe 10, 15 cents on the upper end, and obviously we took it out the last few sessions, but then even the 85 was acting like a little bit of resistance before yesterday's breakout move. So if this stock's to pull back, I think I'd be a buyer in the low 85s and a seller in the upper 85s.
Okay, moving on to Apple Computer. Gapped up. Challenged that 5-day high that we mentioned at 426. Only got as high as 425.99 before settling back at 424.70. Another 3-point range in Apple, Dennis. Can we get a breakout above this 426 level and touch the all-time high at 427.75? Or are we going to break down through Tuesday's low at 422.96 and fill our gap down to Friday's high at 420.45?
That's a tough call, Joel. Hard to say. I think just trade, what the numbers are telling you. Definitely resistance in the 427.75 52-week high, as you pointed out. If we were to get up there, you think the first time maybe it takes out a little bit, and then obviously you have that fake out. I always call, instead of the breakout, I call it the fake out, when they take it out by 20, 30 cents and then sell it off a couple bucks just to shake out anyone who's buying it on a new 52-week high. I think eventually that might happen, if not today. Pulling back, 418 to 420 area is pretty good support. So if you were to cut through that low of 422.96, maybe you go down and you retest that 418 to 420 area.
Okay, the next component, IBM. I mean, this chart is just starting to look more and more interesting, Dennis. It seems to be participating on the upside as we had that rally and got up to the 182 level, which was 9 cents above Thursday's high. But when the market pulls back, this thing is just weak as well, making a low at 179.32 and closing at 180. I mean, we're staying above some critical support here at the 176.17 to 177 level. I mean, as long as IBM stays above there, I think it's good to go to the upside. But looks like it's just getting kind of heavy. It's going to probably, if we come down there again, it's going to be the fifth crack at that area.
Yeah, I don't know what to say. This is a hard feeler because yesterday, getting as high as 182, we were almost breaking this upper end of the trend where, we've had every day it's been the lower lows and the lower highs. But if you go back to a few sessions ago, that 182 actually did crack the high from the 2 sessions earlier. So looking at these two tops here, so if you were to say that, then this pullback's to be bought. So I don't know, the 180 is a key number. Use that for a swing number, and I don't know. It's a hard one to call here, so I'm probably just sitting on my hands.
Okay, Chevron Corporation, mild recovery yesterday. Getting back to 107.98, Dennis. It's the highest it's been since they warned of earnings shortfall. Sold off quite a bit, though, after making that 107.98 high to settle at 106.73. Trading up a few cents from there. That stock did not, it did fill the gap. Tuesday's low at 106.03. It took you down. So we got good support at 106. 106 to 108, Dennis. And anywhere in between there, you have any stopping points?
I don't have anything in between there, really. Above there, that old 109 number is what I was kind of coming to my mind on the Chevron. If it was to get up there, I think you get some psychological resistance at 109, even in the 110 area. I think you've given a good number at that 106, where we had these couple of highs here from earlier, and then yesterday's low being 106.03. Breaks down below there, then you could say maybe 105 just from a psychological perspective, but there's really not that much there.
What is driving Microsoft? Got up to 28.65 yesterday. That is reaching the levels that we hit last year. If you look on our website at the numbers from January of last year. At 28.65, though, someone stepped on the gas on the downside. That really came in just off 28.17. As you folks will remember, we had a series of highs in that area, closing at 27.25, getting a little bounce from there. Like to see a couple more lows here in this 28.20 area, Dennis, and then if it manages to crack that, maybe it might be some time to take some profits in Microsoft or buy some puts.
It's had a heck of a run. Interesting enough, came right down to the low 28.17, which was the old resistance. So resistance did become support yesterday on Microsoft. I'd use that 28.17 to 28.25 close area as pretty good support here. Above the 28.65, then we start talking about that 29 number again that we were mentioning the day before.
Okay, moving on to General Electric. We were talking about that $19 level in the pre-market, Dennis, and as much as the SPUs were trading up, we were a little surprised that it wasn't trading above 19 and holding 19. Lo and behold, it takes a 19.10 high early in the session and then peels back, settling at 18.74. Pretty much on this one, this 1850 level, which was our weekly low, we stopped just short of that on Friday and Tuesday. So $18. Which way we get a couple closes above 19, I think we're good to go north. A couple closes below this 1850, and who knows, maybe we'll go back down and see $15 again.
It was the old fake out play, Joel. That's the one that happened here where we broke through the 19, traded above there for a few minutes up to as high as 19.10 just to sucker a few people in long, and then pulled back pretty hard with no real spike back up through it. So you got to watch. The breakouts in this market are often fake outs. That's what that one was. The second time back up there through, I'd be a little more confident that maybe that could hold. There is some support in this 1860 area, Joel. We bottomed out there a couple times on Friday, and I wouldn't be surprised if that area gives you a little bit of support. But going back up, I think you get some psychological resistance in the 19 area just for those people who bought that fake breakout and could possibly be turning around and selling if the price was to get back up there.
Okay, moving on to our next component, Procter & Gamble making a high at 66.51 yesterday, settling down at 66.26. I see we're traded down 36 cents in the pre-market, Dennis.
Dividend. Joel. Yeah, it had an ex-dividend 52 cents. So the close is actually adjusted close for the dividend is 65.73. Not 66.26. So we're actually trading up here about 17 cents on that ex-dividend, Joel.
Why else would Procter & Gamble be down 36 cents, right?
I know, it's the only thing that pulls it back. I'm going to limit my comments. I do have a trading position in there on Procter & Gamble, but I'll let you give some levels on it, Joel.
Yeah, I still like to say, even though these things go ex-dividend, I still like to stick with the numbers. So, 65.95 was yesterday's low, so that should be minor resistance. Also, better resistance would be that close at 66.26, as folks that have just bought the stock to capture the dividend will be looking to get out flat. Moving on to our next component, AT&T. Made a run at that 30.50 level, stopping just short at 30.47 before settling back at quarter. Got a little gap to fill between Friday's high and Tuesday's low. This 30.10 to 30.17 level. Friday's close right below that. So let's call the range in AT&T today, 30.10 to 30.47.
Yeah, well, I'll call that upper end of the range too. This 30.50 is huge. I see other sides at 30.48, 30.47, 30.45. So you've definitely got somebody that's trying to unwind some stock there. Those high frequency guys are always keyed in on, when you see some sellers out there and you see key technical levels like that. So wouldn't be surprised if you see high frequency resistance in the 30.40s today. So if you're looking to get off a short, it's probably where you look a little bit below there, maybe in the high 30.39 area, 30.38 area. Above 30.50, then all bets are off. But that's your major resistance, is up there at 30.50.
Okay, moving on to our ninth component. It's fallen down a few in the ranks here. J&J was able to get 550 level that we'd been talking about. Ran into problems at 65.69, Tuesday's high. Also pulled, but this day had a big sell-off, Dennis, 64.50. Just kind of snuck down there, came back and settled at 65.12. Currently trading unched in the market, so let's use that 65.12. This 64.50 is looming large for this stock. As long as it's good to go, perhaps to test that 66 level. But below 64.50, Dennis, this thing could be in for a ride, perhaps down to the 63.50 level.
I'm looking at the chart here, though, Joel, that 64.50 number from yesterday. I've got the same thing as the low on a couple of my software, but I don't see that on the chart. I'm wondering if that was a bad tick that just stood maybe on ECN print or something, because where I'm seeing a trade down in the 65.05 area if you bring up the intraday chart from yesterday. So I'm not sure when, the day before on the Friday, it got down like 64.30, so I still think your number has validity. I'm just challenging that low there from both of my software and from your software too. I don't see where it traded down to that 64.50 intraday. But that being said, that 65.50 was taken out. We traded above there for a little while. Again, it was another fake out. There seems to be a few of those that have been happening lately. And the stock pulled back actually after taking out that level. The major resistance up here on this stock is at 66. So in the 65, 80s, and 90s, I think there's sellers all over the place.
Okay, moving on to our 10th and newest component, Pfizer Corporation. Was able to bust through 22. That had held up for quite a while. If you were able to scoop up some stock going through the 22 level, you had 17 cents to get out as it got to 22.17. Peeled back, settling at 21.95 with right off the low at 21.89. Once again, folks, this is a stock that you've been holding since the March meltdown in 2008. It's back up here now. So if you're complaining about stocks not getting back to those levels, here it is, Pfizer at $22. I think in order to have another leg up in this stock, I think I'd like to see 3 closes above that $22 level.
Yeah, I agree, Joel. I think you need to get some closes above there, too. Otherwise, you've just got another fake-out scenario where you get people yesterday buying through the 22, pulling back. So I'd still use 22 as some resistance here. But obviously, if we can get a couple closes above that 22 area, maybe we can continue the higher. It does look like a breakout on the charts, but just so many of these breakouts fail lately that I'm a little bit scared to just buy just from a pure breakout perspective.
Okay, all right. SPU's still hanging up here, 3 points at 12.92 and a quarter. are right around our swing number here at 1292.50. So kind of quiet now, a little over an hour before the open. That's the SPU analysis and the Big Ten show. We're going to take a quick break and we'll be back with our market